So here's a question I get a lot. How much life insurance do I really need? And that's a great question. In fact, there's a lot of potential concerns about buying too much, buying too little. You want to make sure that you're buying the right amount of insurance. And so in this video, we're going to talk about how to calculate the exact amount of life insurance that you actually need. And the most easiest ways to do that. Actually, there's some complicated, really fancy ways to do it, but there's a really simple, easy formula that we're going to discuss in this video. And I think that you're going to want to watch to the end so that you can make sure that you have enough insurance and not too much, and that you're getting the right kind of insurance. So stay tuned to the end. My name is Cluff. I'm a former financial advisor turned educator and coach, and I absolutely love helping people manage, protect, and grow their money, turning their income into wealth and building a massive bank account. So the first thing I want to share with you is that I did a video last week on why you should get life insurance, or do you even need life insurance? So make sure you click up here and watch that video because it's going to be helpful to know whether or not you should even get life insurance. Now that you know that you need to get life insurance, the next question is, of course, how much do I get? And the next video I do is going to be about what kind do I get. So in this video, we're going to focus in on how much life insurance should I buy. In the last video that I did, I shared with you that life insurance is about protection. Bottom line, it's about keeping your family safe. If you were to pass away, would your family be left in a substantial financial burden by your passing? And so in this video, we're going to talk about how to really make sure that your family is taken care of in the right way by making sure that you have enough insurance. Now, the rule of thumb for most people is anywhere from 10 to 15 times your annual income. And that's a really good rule of thumb. If you just want to kind of just say, you know what, I make $50,000 a year, 10 times that is 500,000, let's just do it. And one of the reasons why that's the case is because that if somebody was to pass away, of course, funeral expenses would be taken out of the death benefit. But once the death benefit is received, then you can invest that money and earn a good 5 to 6% return on that money and probably live comfortably and have that income be replaced that was lost for your spouse or your children or anybody who actually is that you're responsible for financially, or that you were co-responsible with financially. The next method that I would suggest, actually, this is kind of the kind of premier method of determining how much life insurance you should get, is called the DIME method. That's D-I-M-E. D stands for debt. So what you want to do is you want to add up all your debt and determine how much you have. And then once you know how much you have, the idea is that when the life insurance comes, you can be the beneficiary can receive the money and then be able to pay off all the debts and be completely debt-free. That's going to free up a lot of monthly payments, because once the debt's paid off, and hopefully the person realizes that now that this debt's been paid off, they're not going to get back into debt. But once the debt's been paid off, those monthly payments go away. So that reduces the obligation every month because the debt has been paid off. The next one is income. So your income, how much income do you want to replace? Again, the rule of thumb is 10 times, which is still part of the DIME equation. So you're going to want to look at maybe 10 times your annual income kind of as an average. And the next thing you want to look at is M. So M is for mortgage. So pay off the mortgage. Do you want to pay off the mortgage? Now there's going to be a mortgage even after your passing for those that continue to live. And so do you want them to be able to pay it off completely and then save the whole mortgage payment? Or do you want to be able to have them have the mortgage payment taken care of for a year or 2 or 3 or 4? And so that's kind of the idea. Either pay off the mortgage entirely or give them a 3 to 5 year window of cash to be able to use towards the payment of the loan until they can actually find some other way to either increase their income or remarry or whatever's necessary to be able to get that. So there's a couple of ways that you can look at the mortgage. The traditional way is pay the mortgage off entirely. So if you have a $250,000, $500,000 mortgage, you're going to want to get that on top of the D and the I, and so the M then continues to increase the total life insurance need. So the E is for education. So do you have children that you want to have at some point in the future? Do you have a goal for your children to go to college or go to a higher education, or to maybe even go to trade schools or something like that? So you're going to want to have money set aside for your children's education as the E. That's the letter E. So to bring this all together, let's say that you have, so D-I-M-E is the total calculation, or the total method to calculate your debts. So let's say for ease of math, you have a $50,000 in debt. Let's say you have $50,000 a year in income, so you're going to go 10 times that, so 500,000. So 50 plus 500, you're currently at $550,000. Let's say you have a $250,000 mortgage, so that's going to put you at $800,000 in need for insurance. And let's say you want to put your kids through, a nice university, or maybe even a local community college, so it's not totally or significantly more expensive than what you really think. So maybe you add on to that another I don't know, $50,000. So you're looking at a total need or total life insurance of about $850,000. So whether or not you buy term insurance or permanent insurance, now you know at least the amount of insurance you're looking for when you're looking to buy life insurance. And that's a really good rule of thumb. The dime method is a great way to calculate how much life insurance that you're going to need. Let me just share with you a couple really quick mistakes to avoid. Number one, relying too much on the work insurance. Number two, not buying enough insurance. Number three, maybe buying the wrong kind of life insurance. One thing that I'll share with you is that over the years as an insurance agent, as a financial professional, I've never had somebody tell me that they got too much life insurance as a recipient or as a beneficiary. But I have heard many people say they wish they had gotten more. So if you want to bolster or buffer or add a little bit more to that number of what the total amount of life insurance you should be getting, I think that the person receiving the money, if your death, heaven forbid, should happen, they will receive more. They are going to be happier than if they received less and they needed more. So the idea here is to make sure that you get enough to take care of the needs and maybe cushion it with a couple extra dollars or a couple extra tens of thousands of dollars just to give that a little extra, so that in case the person that you leave behind, your loved ones, really need it and could use it, because I know that they will be using it and they will need it. If you'd like to sit down with me and figure out how much life insurance you need, go ahead and make sure you take time to click in the link below to set a discovery call with me. Also, I'm developing a SKOOL group that I think will be valuable for all kinds of financial literacy questions, concerns, and ideas and strategies. I'd love to have you. I'd love to see you in my SKOOL group. If you want to know why you should have life insurance or if you need life insurance, go ahead and check out this video here. Until the next one, take time every day to turn your income into wealth and build a massive bank account. Take care.